How are you, David? You're sideways like the market was Friday. There you go. Now you're upright. Now you're like the market trying to recover.
Dave, you might have to adjust your microphone.
Unmute. He's muted.
Yes.
Okay.
There you go. Hey, David. Sorry for.
There you are.
Maybe I sent you the wrong link initially, but I did want to talk to you. Welcome back to F.A.C.E.
Yeah, thank you, Dale. Glad to be here.
Appreciate you being here. And we were talking just a week and a half ago, and you said you started to feel uncomfortable. You had too much company, too many people embracing the melt-up scenario, and you talked about that there could be, something like a 5% sell-off, and when people saw you post that, they thought you meant in the next 5 minutes.
Right, exactly.
Right. So it took a couple of weeks to unfold, but boy, did it unfold. I didn't think it was going to happen in a day.
Yeah, we had a little help from Omicron, but I think it was going to happen anyway. So, and people think it's a one-day wonder, but I look at my work and it tells me we're probably halfway through a correction.
Okay, halfway through, because I was going to ask you about that, because one day probably would not be enough to shake out people still looking for a melt up. So do you think we've done enough on price? Because when you and I were talking last week, I pointed out prior highs, and we didn't quite get there in either the S&P and NASDAQ. In fact, NASDAQ could break another 500 from here for previous highs. So, how long do you think this process takes before we start heading back up? Because I know you're still looking for higher highs.
Yeah, well, after Friday, I'd say if we get a couple more days like Friday, we've done it. But it probably, as you know, it's not unusual to see the first 10 days of December kind of soft, or certainly the first week or 10 days. So we could take, a couple weeks from here, might get done in a week. Who knows? But
could it be a 10% pullback, Dave? Is that what you're saying? We could have more?
Certainly in the NASDAQ, I'd be surprised if it gets to anything close to 10 for the S&P. I still think it's probably on the order of 5 or 6% for the S&P. So, I'm kind of targeting the 44.50, 45.50 level, and more likely, just below 4,500. That gets you back to the trend line from March 2020, I think.
Okay.
And the NASDAQ, which obviously had a bigger play in the early November run, I think that could be a 10%er, and that anywhere from 8 to 10%. I think the semis could even go beyond 10%. Everybody ran that thing up, so I wouldn't be surprised if we get a little bigger hit in the NASDAQ. On the other hand, the Russell, which you would think would kind of be closer to the NASDAQ in terms of its downside, it doesn't look to me like it has a lot of downside left. It could come down to just under 2,200, 2,180, something like that. And again, I'm not a technician. I'm not a short-term trader, so these levels are not in my mind. Don't look at me as a short-term guy that gets these levels right. But just kind of guessing, I'd say that'd be about where we could go, and I still call for 2,900 on the upside in the Russell. So that's a nice move ahead.
Okay. Most technicians are going to say we had a breakout and we've had a breakout failure. So, I thought that we would pull back and hold. 6 months, 8-month breakout sure didn't mean much. I mean, a lot of people that got long in here, they're underwater now in Russell.
Yeah. I just don't agree. I do think this breakout in a lot of things is you had a quick run in the breakout.
Yeah.
And yes, you're probably going to undercut the highs that you broke out from, but not by a lot. I mean, I think you're just, as I said,
like 231 was like the breakout level on that one.
Right. But you've got so many people that went from bearish to bullish in a hurry. I just think you have to do something convincing. Like you say, if you just go back to the breakout point, people are gonna just jump right back on the meltup story. And I think you've got to wind out some of that. And it doesn't mean it's a long-lived correction. It just says, you probably do have another week or two to go.
Okay.
I
wanted to ask you, because when I first talked to you, you were talking 4,700, which you had as a long-standing target for a long time, right? And I was just thinking about some of my experiences, and then, I'm looking for something, and the longer it takes, the more, maybe I doubt it, or I change the targets. And I have found that my original thought is usually the best one, and I'm wondering what would tell you that there's not sharply higher levels left. Is there an area, if we breach it, that changes your mind for a melt up to 5,300?
It would take a pretty good break. I mean, if you saw the S&P down to 4,100 or something, I'd probably be turning south. But I don't expect that. You could even trade down under 4,300 and it wouldn't change my mind. It's more, I'm actually, and I think I might have posted something like this today or Friday, but I'm actually thinking my 5,300 on the S&P, which is my current level, is probably going to be proven low. I still think people use the term melt up, but don't really understand because I really was the one that started talking melt up before anybody. When I use the term melt up, it's going to be a stunner. I mean, it is not just, what we saw in early November. It's not just several days where it seems like it won't come down and everybody's jumping in. It's going to be a stunner. I just
Friday in reverse. We should have an update with the equivalent move, like a 2%, 3% update during the melt up.
You're going to have those. I'm not so worried about how it plays out day to day. My only point is that I think you're going to cover in 2 to 3 months' time. You could go to 6,000. I don't know whether it's 5,500 or 6,000. It's going to go vertical, and so picking a number is just total guesswork. But I look below the surface and see so many groups that are just breaking out. I'll talk about semis. Semis, obviously, were kind of laggards through the summer or early fall because of the supply chain issues, and all of a sudden, what happened in that early November period is people started hearing that some of that supply chain, particularly on chips, is being cleared up, and all of a sudden you saw the semis light fire and go. I've had a 325 target on SMH. It got to 318 in this recent run.
Right.
I think I'm probably going to have to raise that target to 375, and I don't even know if that's the right number. So I mean, that's just and that's a group that's already run. I look at materials. I keep saying you're going to have copper go to $6. You're going to have lumber is already on its way to 1,000, I think, which has been my number. So you're going to have a lot of the materials running. And I think it's a sign that you're going to have, the industrials running.
Is this because the Fed? Is this because the Fed's now has an excuse with Omicron to, kind of talk more dovish about the uncertainty of the virus and stretch out? Before this announcement, they were going to speed up the taper. Are they going to slow it down? Because it's not. You don't think what takes this market down and ends the bull market is going to be the virus. You think it's going to be monetary policy, right?
Well, I think it could be some of both, but I think monetary policy is the driver.
Okay.
I would say in terms of your question of the Fed, don't
Yeah.
forget the Fed hasn't really changed anything. What has changed in the last few days is the
less
narrative.
QE.
It's the narrative. It's not the Fed changing their mind every 10 seconds. It's the street changing their mind every 10 seconds. So Omicron
Okay.
on Friday, you know, people jumped the gun, said, "Oh my God, here comes another strain. We're going to have another,
Lockdown.
lockdown," and the airlines are starting to cancel flights overseas, et cetera,
Right.
and everything tanked. Um, you know, Jay Powell's probably looking and saying, "Well, that takes some of the pressure off
Right.
in terms
That's
of
what
how fast we have to taper." So I think he's steady as she goes, and I don't, I get beat up on Twitter for supporting him, but I don't think people realize how important it is to have a steady hand at the Fed, not somebody that reacts to every trader that gets excited every other day. It's like the traders want to see everything change every 5 minutes. You want a Fed chairman who basically is looking, over the horizon, saying what's the sober way we want to approach this. And I think having him back in that seat, and not Lyle Brainerd, is a positive.
Okay.
I think his idea that taper is gradual and goes, so that if you play it out the way they're projecting, it's done by June. And then you can start talking about tightening if we need to, meaning in his mind, he's saying at that point, we'll consider how fast we have to tighten. So that's, for the market, once it gets comfortable that is the game plan, I think they're going to be bullish. And
so it's like a green light until June. So
no, because I'm not saying we will get to June. I'm saying in his mind today, if anything, Omicron keeps him on track, saying, well, I still got an inflation problem. That's not going away. But I don't know how much of that is transitory. I don't know how much of the other things we have to be concerned about, like a new strain and like, the economy, losing steam because of COVID. So I think it keeps him in a balanced view that says I gotta taper, but I don't need to speed up that taper. And by the end of the first quarter, he may have a different view. But I think for the next 2 to 3 months, Fed policy in Jay Powell's mind, he's the one that matters, is going to be steady as she goes. And so, again, the narrative that's on the street is what I'm shooting against, not Jay Powell. The narrative on the street that, we're going to have 3 rate hikes in 2022. I actually think that could happen. But between now and when that does happen, I think the street's narrative is going to go to the point of saying, we're not going to have rate hikes in 2022, or we're certainly not going to have 3. So it's more the narrative on the street that changes all the time.
Okay. All right. Well, this was an important change. And actually, we have people spying on you. Forex Gal, when you come in here, you end up with followers, right? And people started following you. And we were doing a FACE webinar one day, and Forex Gal said, David Hunter's bearish oil. And, was up here. And I went to your stream and saw you were talking about the oil cycle peaking, and that you thought the first wave would be low 70s, upper 60s. Great call, David. Nice.
Yeah, thanks. So sometimes you get lucky, but that was what I saw, and I said, again, I don't know if it was today or Friday, or over the weekend, but I said there's a my best guess right now would be that oil stays in a range between the low 60s and the mid 70s for the next 2 or 3 months. Doesn't have to, but I wouldn't be surprised if that's kind of the range. So there's some downside from Friday's lows. not a heck of a lot, and there's some upside, but not a heck of a lot. So oil becomes kind of the non-story, in my opinion, in what I think will be an inflation story because of things like copper. So
Okay.
that's and when I made this call of oil's, peaked for the cycle, most likely when it was 85.
Right.
I got beat up a lot because people said, you're not consistent. You're saying we're going to have an acceleration of inflation,
Right.
but you're calling for lower oil prices. And I said, they don't all move together. You do have you do have precedent where oil has not been part of the inflation story. And I think that's basically what the next 2 or 3 months is going to be.
Agricultural commodities, industrial commodities.
Yes. Yep.
Okay, so let me bring you back. So some nice calls there. Who's selling this gold, David? When we were on together, I showed this breakout, right?
Yep.
And then a few days later, one Fed governor made a statement about tapering or staying tight, and we negated the breakout in gold. And there is one hope for bulls, maybe around 1770, but I have a hard time wanting to be long the metals right now. Who keeps creating these aborted breakouts? Who do you think is selling? Who's selling gold, Dave?
Well, we didn't have a lot of help from the dollar in the last month, or the last couple
That's
weeks.
part of it. Okay.
So I think that's a lot of it. And frankly, it's clearer on the silver chart than it is the gold chart. But this sell-off was very predictable, and it's an inverted head and shoulder ready to happen. I believe if people step back and understood and looked at the monthly, people forget where we were in early October. We're not even close to the lows of early October. So, we're at the end of November. So the monthly is right where it should be. And I think you're going to see, maybe by the end of the year, certainly by January, gold, up towards 2000, maybe above 2000, and silver up above 28 on its way to 30.
Okay. Well, like everything, time will tell. Do you like the miners?
Yes, very much so. To me,
Okay.
to me, the downside here is virtually nil, and the upside's big. And
Okay.
again, I'm not big on what's the next month or two, so I don't want people thinking that's my call. My call is that certainly in the next 6 months, could be in the next 3 or 4, you could see gold at 2,500, you could see silver at 50. So I'm still as bullish as ever, more bullish than ever. I think the metals are doing just fine.
Okay, and I know you're looking for higher yields. We had this big pullback with risk off. Is this a selling opportunity in notes? And you're still looking for levels up there around 2 and then 250? Nothing's changed there?
Absolutely. Yeah, I view this as, I don't know what the next, if we get another, if we see another sell-off in equities like we saw, probably doesn't play out over a day. It's probably over, a week or two, as I said. But so I don't know if you'll get any more downward pressure in rates. But I think we're, all the risk reward is really skewed heavily to the upside on rates. I think
Okay.
we may have seen the lows at 240 at 143 back on November 9th when the CPI came out. That's kind of my best guess. It's possibly undercut that.
Big support was this range here, David, above like 138. This was a pretty big breakout level. So, worst case may be there.
I think the next few months, it's going to be heading towards 2%. And ultimately, maybe by the end of the first quarter, we could be at 2.5, certainly in the second quarter. So, and the 30-year, I think, can get up to 3% in that time. So, and I think something people are maybe just beginning to focus on is the fact that spreads are widening, junk's rolling over.
Right.
The corporates are rolling over. I think that could be there could be more story there for during this next week or two, where it looks
Look at
to
that.
me like you can get some more weakness in the lesser quality, and spreads widen
It
further.
always
So,
starts there, doesn't it, David? And then there's some disintermediation where rates could go up and the market could fight it until it gets to some tipping point, and then it all
yep,
falls apart, right? So,
yep. On
um,
the other
go
hand,
ahead.
because I'm looking for this big melt up, I don't think rates get in the way of that. Meaning, you may be up and down for a while until you get above 2%. And I don't think the move to 2% stops that melt up in any way. The last push where the Fed's involved and tightening could be the last 0.5% move up in the 10-year or something in that area.
Okay, because these yields are going to move up without the Fed tightening just during a taper, right?
Yeah, no question.
Okay.
Bond market will push rates without the Fed. I'm
You
just
were
saying,
you were a bond vigilante, I think, 30 years ago, weren't you?
well, I'm
You know,
certainly a big believer, and I've been on Twitter a lot saying bond vigilantes are in charge of rates, not the Fed. The Fed
remember we
the
we
Fed
used to get on
follows.
our horses and ride onto the floor of the Chicago Board of Trade and make all those guys,
Oh,
this market's bad.
I remember it
Hands
well.
out. Yeah.
People can talk about Jay Powell all they want, but there's that posse out there that will do the job.
Yeah.
The bond vigilantes will ultimately determine where rates go.
Okay, David. And anything else you want to cover? I think we've covered the narrative, and it's a great update on the narrative. So really appreciate you being here with us. And I someone asked me again what Dave H. Contrarian stands for, and I guessed once it was humble. How about honest? Dave,
I,
the honest contrarian who admits when he's wrong.
I'll take that one. Not everybody agrees. I admit it. I get beat up. People say you never admit. I go, you got to let things play out. I'm not going to say I'm wrong while my thing's still in the works. So, but yeah, I'll take that one. That's a
You
compliment.
like that one? All right. So I crown the honest contrarian, David. David, thanks so much for being with us again today, and we'll keep in touch, and appreciate your conviction and some very nice calls about this correction coming, and that crude call was excellent. Because that was kind of a diversion from the everything goes up together.
Yeah,
So,
sure was. I'll leave you with this one.
all right.
I think the FANGs, in spite of rates maybe moving up here over the next few months, I think the FANGs could have a pretty good run in that melt up. So don't get all one sided and say, oh, it's just going to be cyclicals. I think you're going to see some of the growth areas play too. It's going to be an interesting.
Yeah, I know you can't comment on individual issues, but yeah, they took a pretty good hit. But I know there are people talking 175 Apple. It's $20
Yeah,
a
I
day.
mean, Apple looks good long term, meaning the next 3 to 6 months. All the ones within the FANG, I think, are likely to move. And I would even say, although, and again, I'm not saying from here, there's a correction still in those things left, but I would say even Kathy Wood's ARC looks like it could play once it may have to retest the lows of the last few months, but from there, I think you're going to see a pretty broad melt up. It's not going to be narrowly focused.
Okay, so something that lifts all boats and belong the world until the Fed really has to tighten, and that looks like that's still in the first quarter, or are we out to the second quarter before we see Powell raise rates?
I'm guessing second quarter, but time will tell. What I do feel is you could cover that entire move, whether it's 5,300, 5,500, 6,000. You could cover that entire move in 2 to 3 months. May take a little longer, but melt ups mean vertical.
Right,
People I think
parabolic.
are going to be parabolic.
Yeah. Okay, so everyone get out their parabola for this. And David, good hunting. Appreciate you being with us, everyone. David Hunter, and you could follow him on Twitter at Dave H. Contrarian. Good hunting, buddy.
Hey, thanks, Dale. Have a nice Christmas season here.
You too, and we'll get back together in the spring. See
Sounds
how things turn out here.
That should be interesting.
All right, David Hunter, everyone. Thank you, David, and you guys can join the team in 13 minutes for the morning edge. Remember, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday, and people are saying thank you, David. So appreciate your giving spirit to share your ideas. And that's a wrap, everyone. Good hunting the rest of the day, and go join the team in 7 minutes on the morning edge. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.